Hi, we're going to talk about financial statements. Our team is Melissa Cota, Miguel Favela, and Simon Rosas. We are going to talk about Apple. Apple is a big international company that sells technology like cell phones, computers, and all that stuff. We choose that company because it's one of the largest in the world, and that's why we're going to present you the three types of financial statements. There are three types of financial statements. The first one is the balance sheet, cash flow statement, and income statement.
I present the cash flow statements of Apple company. What is cash flow statements? This statements giving details of money coming into and leaving the business. The statements of cash flow is the basic financial statement showing the cash generated and used in activities of operation, investing, and financing. The purpose of this statement is to present fundamental information regarding the cash movement on an economic entity over a period. For example, I show you the annual data of Apple. In the first place, we have the period ending. This is that. I show you to compare the 2016 to 2015. The net income, and show the difference. It's more low in 2016, and the cash flow operating activities, the depreciation of Apple, it's more low in 2016 than the last year, and the net income adjustment the same. It's more high in 2016. The change in operating activities, account receivable, that is on a part when we have to be low. In change inventories, we have a lower in 2016, and the other operating activities, it's an increase in the last year. And liabilities, we have more liabilities in 2015, and the net cash flow operating, it's more higher in 2016. Cash flow investing activities, capital expenditures. The company have more capital expenditures in 2016, less investment, but in other investing activities we have an increase in the last year. Net cash flow investing, in that part, in the net cash flow, the result is the company have more net cash flow investing in 2015. I'm sorry. The cash flow financing activities, sale and purchase of stock. They have more stock in 2015, and the net borrowings, it's low in the last year. And other financial activities, we have more financial activities in 2016. We have the effect of change rate, and the net cash flow is the money that the company has to in the end of the period, with expenses and income included in that part. The company win money in that part. We compare 2 years only.
The balance sheet, also called statement of financial position, is a statement showing the value of a business assets, its liabilities, and its capital or shareholder equity. That is money the business has that belongs to its own. Balance sheet of Apple. We're going to talk about the values of 2016 and 2015. For example, we have the current assets in the cash and cash equivalents. Apple has now $20,484,000. That's like $700,000 less than last year. In short-term investments, now Apple has more than 26 million more than last year. Inventory is also a little bit lower. Net receivables is lower with 29 million, and other current assets it's like $7 million lower than last year's. The total current assets are $106 million, and that's like $20 million more than last year. Then we have the long-term assets. Long-term investments are $170 million, and that's way more than last year. Then we have the fixed assets. That's $27 million, $5 million higher than last year's. The goodwill, that is like the reputation and the market value of the company. It's $300,000 higher than last year, and the intangible assets are lower than last year for $600,000, and other assets are $3 million higher than last year. So the total assets are $321,000 million, and that's $30 million higher than last year. The current liabilities. In accounts payable, we have almost the same numbers than last year with $59 million. In short-term debt, we have $11 million. That's $1 million more than last year. We have also other current liabilities that are almost the same last year, and the total current liabilities are $79 million, $1 million less than last year. In long-term debt, we have $75 million. That's $22 million more than last year. Also in other liabilities, we have $36 million. That's $3 million than last year. And in deferred liability charges, it's less than last year for $1 million. So in total liabilities, we have $193 million. That's $23 million more than last year. And the last part is the stockholders' equity. We have in common stocks $31 million. That's more than last year's. And retained earnings, we have $96 million. It's $4 million more than last year. We have our equity for $634,000, and the total equity is $128,000 million, and the total liabilities and equity is the summatory of the total equity and the total liabilities, and it's $321 million. That's more than $30 million than the previous year.
Okay, so now we've discussed two types of financial statements from the company Apple. Now it's my turn to discuss the final statement, which is the income statement. This one is the one that really matters the most to the shareholders. The income statement is also called statement of income, profit and loss statement, or profit and loss account. It's a statement showing the difference between the revenues and the expenses of a period. That's what we've wasted money on, or invested money on, or had expenses of any kind, and all the revenues we got. So we got the results of a period and the money that we gained because of it. So now let me show you an income statement of the Apple company. So we have here the income statement, and first of all we have the period. As my other team members have discussed, we're talking about the 2016 and 2015 years in the total revenue, and there's a difference. In 2015 we had a bigger revenue than 2016, with approximately $15 million or more. The cost of the revenue was also bigger in the 2015 than the 2016 year, giving us a difference in the gross profit. So how much revenue did we get? It was bigger in the 2015 year than in 2016, also with a difference of almost $9 million. Then we have the operating expenses, which are all the operations that the company went through. We have different kinds of research and development for technology, the sales and general administration, maybe there goes all the expenses for the marketing team. The non-recurring items, we don't have those, and we don't have the other operating items. The operating income of the company was $60 million versus $71 million from 2016 to 2015. So, on 2015, we had a higher operating income than in the most recent year. Other incomes and other expenses were also discussed. There's an earning before interest and tax. So, the earning was higher in 2015 than it was in 2016, with almost $8 million of difference. There comes the earnings before tax and the income taxes. In this case, we have to pay to the government. We have to pay different types of taxes for the company to be allowed to exist in the marketing world. And finally, we have the equity earnings and the loss on consolidated subsidiary. Both of them are in zero. The net income for the operations was higher in 2015 than it was in 2016. We also have the net income, which happens to be the same. That is the net income applicable to common shareholders. So, in 2016, we have $45 million versus $53 million that will be applicable to the shareholders. And that's it. So, that is us talking about the Apple company and the different financial statements. We hope you've enjoyed this video, and we'll see you later.